Hi, everyone. Big thank you for tuning in to this week's weekly roundup by the Startup Operator. If you're joining us for the first time, the weekly roundup is a live discussion on the week's biggest headlines from the Indian startup ecosystem. If you're a curious person who likes to follow fundraisers, startup trends and insights, and how India's startup ecosystem is evolving, don't forget to hit subscribe on the Startup Operator channel on YouTube and check out the podcast on Spotify, Apple, Google Podcast, or your other favorite podcast platform. This week, joining Roshan and me to discuss the news is probably someone you might be aware, might be knowing. His Digjay Patel, who is the co-founder and host of VCpreneur podcast. I mean, he talks a lot about investments, bridging the gap between founders and investors, and I'm sure in this discussion today he'll have a lot of interesting insights to share with us all. Digjay, welcome to the weekly roundup.
Hey Gunjan, thanks a lot, and yeah, thanks to you and Roshan for inviting me here. Excited about all that we're going to discuss.
Yep,
Hey, thanks so much for joining us on this podcast, Digjay. Really appreciate it.
No, absolutely, it's a pleasure.
So, I mean, yesterday we just had the Onam celebrations, and today is Raksha Bandhan. What are you both planning later in the day?
I just got my Rakhi, right? My sister lives in Dubai, so she's just sent the Rakhi. So I'm due to, have a bath, do some puja and then wear the Rakhi and send the photos to her, right? It's a typical lazy Sunday. But festival weekend and happy Raksha Bandhan to everyone who's listening. Belated Onam wishes as well, right?
Yeah, likewise. I'm just waiting for my cousins to come in as well and loosen my first strings today. But exciting times.
Yep. And also it'll be very similar to the exciting news that we have to share. So let's kick this off with the fundraise by Ultrahuman, right? Now, it's a fancy name to have, but they're also doing something ultra in the health tech space, right? They're innovating with a glucose tracking wearable that is helping people improve their diet and exercising. Recently, they raised a Series B fundraise of 17.5 million that came from Alpha Wave Incubation, which is backed by Disrupt AD and managed by Falcon Edge. Other investors included Steadview Capital, Nexus Venture Partners, Bloom Ventures, and Utsav Somani's iSeed Fund. Now, it's really innovative, to say the least, right? That how this is a single marker, which is glucose, it can tell a doctor or a person through the right tech of how a particular food item is, affecting your metabolic rates and responses. And just looking up a study yesterday, over 1 billion people in the world suffer from metabolic health disorder, which accounts to almost 85% of all chronic diseases in the world. So, I mean, we have seen the rise of, fitness tracking and health tech, but I mean, what's your take on using just a single biomarker for so much of information?
Yeah, I think, it's still, while it's novel, it's still the tip of the iceberg. And, you'll see a lot of verticalized software and verticalized approach within digital health. And, this is one of them. And glucose, like Ultrahuman also talks about, it's a good proxy for a lot of multiple diagnosis, not just your insulin and heart rate and other levels, but multiple factors that can be tracked just with glucose. And I think you're seeing a lot of macro trends supporting this. Like post pandemic, we've seen that shift from reactive to a more proactive approach to health and fitness. And that are some of the tailwinds that companies like Ultrahuman are going to see going forward. And self-testing, live monitoring, these are things that are going to become very easily accessible. So I definitely see a huge opportunity here. And the way they've approached, created a buzz around the beta. They've got all their investors, to use the app and create that FOMO on Twitter. I think it's incredible, and just looking forward to see how they build on this.
Right, Roshan, what about you?
Yeah, for sure. I mean, Ultrahuman as a brand is super cool, like Digjay mentioned, right? I mean, I see quite a few people on Twitter really bragging about it. And insulin sensitivity is a key health marker, actually, right? And I was reading this book by Bill Bryson called The Body, and it makes the point that for the first time, perhaps, I mean, we have more people dying out of chronic illnesses than any other kind of disease, right? Or even accidents and so on. So, which is like a very big deal, really. And this whole thing is a reflection on this consumerization of healthcare, right? Which is a very, very positive trend, because nobody really likes going into hospitals and dealing with doctors and everything, right? This is sort of a white glove approach, gives you more control of your own health, right? And you're going to see these kind of proactive solutions coming out of the pandemic, as Digjay mentioned. So very positive trend, and all the best to the team.
So also, I think Browser Stack and Freshworks, which were the highest valued SaaS startups in India, they lost the top spot to Postman. Postman becomes the most valuable SaaS in India after its fundraise of $225 million. And this fundraise was led by its existing investor, Insight Partners, along with the participation of Coatue, Storage Silicon Valley investor, Mary Meeker's Bond Capital, and Battery Ventures. With all of this, their valuation has gone up to $5.6 billion, right? And I think Freshworks is expecting to go public in the US. They are valued at 3.5. So we're seeing this again shift, right, into this whole API culture and economy. What's your take on it? Roshan, why don't we start with you?
Yeah, see, we've spoken about the developer tools market, and this is a classic case of building shovels in a gold rush, right? I mean, you're seeing the proliferation of software, you're seeing the proliferation of devices, and obviously connecting all of these intricate pieces together will become a very, very key aspect as we go forward, right? Today, a piece of software cannot sit standalone in a stack, right? I mean, it has to integrate with everything that a customer is using, both on the consumer and the business side of things, right? So also, I feel APIs are such fundamental building blocks, right? I mean, today you cannot consider building software without an API sort of a strategy, right? And I also feel that as we sort of move into this product to platform phase, there'll be a lot of platforms emerging, right? Today, I'm on the business side. I mean, you have Salesforce, you have obviously the Microsoft ecosystem and the Google ecosystem, right? But you'll also start seeing a lot of these SaaS solutions, critical solutions start maturing and building platform ecosystems of their own, right? So, which means having that API-led approach will become very important. And also, I don't know, might seem a bit futuristic, but I feel like we will get into this sort of an appless future, at some point of time, where services are being consumed, and the front end could be just anything really, right? So again, all the more reason why APIs will become key. And even on the distribution side, right, I think APIs offer an unfair advantage. I'm not sure how many of you are young enough to remember how Facebook won against Orkut, right? One of the key reasons why Facebook won against Orkut was all of the API stuff that let people develop, things like Farmville and, all of those crazy, stupid quizzes and stuff like that, right? Of course, I mean, it's another matter that they're now closed in terms of the API system. But yeah, I mean, I see them becoming super relevant in the future, really. And again, such an amazing story. One of the most important companies, right, built out of India, I feel in the last 5-6 years. And what makes me proud is the fact that this is the best product in its category, right? It's a world-class product. A friend of mine, Kushal Bagya, had tweeted recently that, this will become a $100 billion company by 2025, right? I mean, it might seem like an absurd number, but you look at the TAM itself, right? I mean, every developer swears by, Postman, right? And they're already at, I think, 17 million developers, some 500,000 organizations, including like some of the leading organizations across sectors using them, right? So really the sky is the limit, and it'll be very, very interesting to watch, how this journey pans out over the next 3-4 years for sure.
Digjay, what are your thoughts?
No, I absolutely agree with what all that Roshan said, and with the no-code world now coming up, emerging, APIs will become even more important. With OpenAI and Codex and some of these technologies merging, I think these are going to be critical for these companies to democratize just access to becoming a creator and starting your own business without their tech know-how. So I definitely see them working in the right direction. And I think what they've recently also done is it was a platform initially for testing, building, designing, and now they've also moved into a marketplace model where they're also helping discovery, which I think is a very novel approach, where it opens up the funnel for them even more, to come and give access to the APIs that they have in-house, plus also let them just come and share APIs with each other on the platform.
Great. And Roshan, as you rightly mentioned, that Facebook got in that whole era of online gaming, right? We used to spend hours playing Farmville and Candy Crush, and the other game of Angry Birds. It all came in that era, and
Angry Birds.
and I remember like how my mom would scold me every time whenever I used to like spend hours on mobile gaming. But a company, Zupee, is trying to change that entire norm. It's helping people earn money by playing games, and they recently announced that they've raised $30 million at a pre-money valuation of 500 million in its Series B funding round. This round was co-led by Silicon Valley-based Westcap Group and Thomas Bay Capital. Now, Zupee has an existing user base of 1 crore plus, and this funding round will be used to enable scaling efforts for market reach and hiring global talent. And by 2020, the industry saw over 53 billion mobile gaming downloads worldwide. And it's very interesting to note that out of that, 17% came from India. We have spoken a lot, about how Geo has enabled a whole new different type of innovation with this mobile penetration, internet penetration, and things are looking bright for the gaming market as well. So, Digjay, how would you predict what gaming market will look like for India by 2025 or 2030?
I mean, not a big gamer per se, but just following the market and looking at the numbers, and you can see the valuation jump, right? I mean, they were valued at probably around 100 million before this fundraise, and it's a 5x jump with this one fundraise, and this is just between 6 months. So investors are clearly looking at a very very huge TAM and the potential for more penetration within the Indian market. And I'm sure with fundraisers like these ticket sizes, it just opens up a lot of possibilities for startups. Where they're looking at their, of course, the core vertical that they want to go deeper in, but also explore adjacent use cases, adjacent markets, and that again helps the TAM, helps the overall opportunity, which I think what all investors are looking at.
Great. And also in our gaming founders that we interviewed in our podcast, right? One thing which was very clear is that you can't build a game for a specific geography, right? It's like no matter what you build, you have to build for a global audience. Roshan, anything you want to talk regarding that on building for a global audience?
Yeah, I mean, and also I think, see, gaming is such a dogfight business, right? I mean, arguably every business is tough, but then you look at the shelf life of some of these games, right? I mean, you would not know 99.9999 some percent of the games produced, right? And literally anyone and everyone can be a competition. And interestingly, the one of the best IPOs of the year was Nazara, right? Which is again in the whole gaming and sports media space. So yeah, interesting times for sure. And see, I mean, we kind of discount, or rather we take it for granted what Geo has enabled, right? But look at all of the business arising from that, right? I mean, this is going to be amazing. Yeah.
Yeah, and I'll just add one point there. Like Dream 11 is a classic example. They are a huge company in itself, but they also have earmarked about 250 million to invest in just games, sports, and the content around gaming. So that again adds and talks about the bullishness that investors have in this sector. And I mean, 250 million is a massive fund. Like it beats some traditional venture capital funds that are based in India today. So I think it's a big TAM to go out for all the investors there.
Right. Yeah. So very interestingly, Cred is like one such company that focused on a very niche user group, and that was very similar to creating its own market for itself, right? And with that kind of an ideology, they recently forayed into P2P lending with a new product called the Cred Mint. Now, Cred Mint allows users to lend their money to others and make a guaranteed 9% returns as interest on the money they give out as loan. Now, see, interestingly, P2P lending is form of an unsecured lending, right? There's no guarantee put up by the borrower for the lender to redeem in case of a default. But I think this works out really well in Cred's favor. The users are itself the most credit-worthy people who have a good record of repaying back on time. But there was a lot of criticism on Cred's business, but I think we're seeing this grand design play out now. Roshan, what are your thoughts on this move by Cred?
Yeah, see, I've said before that, Cred is at the stage 0 of their development, right? Where they're trying to build a community of high credit worthy people, right? Cred's entire premise is that, banks aren't suitably positioned to sort of discriminate, in a nice way between customers, right? And their entire base is people like you and me, for example, right? I mean, who are the probably top 1-2% of people earning in India, right? And Cred's entire premise is to like treat us separately and to give us that white glove sort of a treatment in terms of services and everything, right? And P2P is awesome for credit access, right? There are a lot more lenders in this case and not a centralized sort of a functioning. Obviously, I mean, it has its own downside in terms of the risk and whatnot, right? But it's also very regulated business, and I feel that this is that is the one major risk that I see, right? Which is either the RBI or someone like coming in with some kind of a norm that will completely turn the business around, and it has happened in the past, right? I mean, we spoke to Smita and Ram of Rangde earlier, which is a P2P lending P2P platform anyway, right? And they had to go through plenty of things, change their incorporation, etc., about 4 or 5 years back when the RBI norms came in. But RBI recognizes this entity called an NBFC P2P, right? And basically what they say is that the cap, the maximum that can be lent is around 50 lakhs, right? And if you're investing anything more than 10 lakhs, then you have to produce some kind of a certificate from your chartered accountant certifying that you have a minimum net worth of 50 lakhs and stuff like that, right? So interestingly, if you are an existing NBFC, right, you cannot operate as a P2P NBFC, right? So that's again a sort of a regulatory moat in some sense for Cred itself, right? But this is going to be interesting. I saw quite a few people on Twitter itself, saying that they will put in some money, right? And I think they're offering around 9% or something. I have invested in Finzi earlier. Finzi offers around 12 to 18%, depending on your risk appetite. So interesting times for sure. And I mean, again, this is just one of the products we produce for this community, right? I mean, I would say this is probably stage 1 in that sense. Yeah.
Digjay, what do you think would the other stages be for Cred?
Yeah, I mean, just like Roshan said, that's been their approach for all the products they've launched. They're learning while they're building, and very well using that feedback loop to make those products better and just make it foolproof. I think, I mean, it's anyone's guess what Cred will build. After this, they have the premium data that you can get from an Indian audience. Like with anyone with a credit score of more than 750, it's valuable data, and we all know what companies can do with data, and with so much data and so much filtered data out there, I think they have scope to build more and more fintech products, especially because of the trust factor which comes in. And with Cred Mint, I think even with 9%, which is probably lower compared to what traditional P2P platforms would offer, because the default rates will definitely be lower given the qualifying of the credit score. I think that's going to be a moat that Cred is clearly exploiting with this product.
For sure. And I think this is the first of the many products that they will launch, right? I mean, like, and also look at who they're competing with, right? I mean, they're competing with banks and so on who have like 40-50 products and manage and about like 10 or 15 years of transaction data and still manage only to sell about 1.5 or 2 products per customer, right? So this is going to be a very interesting play, like a data-led model where they figure out personalization at scale. So the next 5 years will be amazing to see like what other kind of products they will produce.
So while Cred is helping on B2B lending, Facebook recently announced its entry into the MSME lending space. I think it was last year that Facebook announced a $4.3 million grant for small businesses in India. And with its new loans program, it will allow lending partners to grant small ticket loans anywhere between the size of 5 lakh rupees to 50 lakh rupees. And all of these will have a predefined interest rate of 17 to 20% per annum. And the best part is these MSMEs won't require to provide any collateral or joining fee to access the credit. But here's the catch, right? I mean, there has to be some win for Facebook. One of the terms and conditions states that the business must have advertised on the Facebook family of apps for at least 180 days at the time of application. Now, this is one of the top criteria for the eligibility. But I mean, interestingly, India is also the first country where this program is launched in Southeast Asia, and this is being done in partnership with online lending platform IndieFi. So, what's your take on this, Digjay?
Yeah, I mean, it's a very interesting criteria. I didn't know about that, and FB says that it's not going to monetize the program itself, meaning with the lending and everything, they're not taking any margins, and IndieFi and many of the partners will disburse those loans to SMEs. But I think what they're going to, they're definitely going to indirectly benefit from this initiative, because that will just, give them some cushion to, have more ads and put their products on FB. So that's a very interesting criteria that they came in with. But definitely it's going to be a, net positive for the ecosystem. We all know how much the MSMEs have suffered in the last 1.5 years. So, I think with more and more players like Facebook, they should definitely, come forward with these initiatives. And if they don't benefit directly, that's fine. They will definitely benefit indirectly in the long run.
Yeah, and we saw Amazon launch its Sambhav Fund, right? I mean, looks like everyone's kind of discovered this huge potential in the 6.3 crore odd MSMEs in India, right? And Aviral Bhatnagar had a very interesting take. He said that Facebook revenue is around 90 billion. Right, assuming Facebook's return on ad spend is 4x, then Facebook sells $360 billion worth of goods on its platform, and Amazon's third-party marketplace GMV is 300 billion. While I mean, it's not apples to apples in the sense that enabling discovery of products and services is not the same as running a marketplace, right? Obviously, but then I was just thinking, right, and it's a thought experiment. I mean, imagine if Facebook ties up with the likes of Delivery, for example, right, and does the whole logistics and everything like a plug and play backend for some of these businesses. Then you're going to see some elements of all of this marketplace stuff coming up on Facebook as well, right? And on the other end, if you look at Amazon, I mean, they have been really successful with their Amazon marketing services, where they're getting people to spend huge amount of ads. Huge amount of money on their ads and everything. So in some sense, Facebook is trying to become an Amazon, and Amazon is trying to become a Facebook, right? The lines are really blurring in that sense, right? So, credit is a huge problem. So it can be a very effective tip of the spear for any of these organizations to really acquire customers and merchants, and then provide any of those other value-added services, whether that's software or logistics or whatever else. So yeah, definitely very interesting times.
Yep. So I think it's now time for that part of the weekly roundup where we announce another unicorn. So this week it was Zetwerk that operates as a contract maker for consumer and capital goods. With a valuation of $1.5 billion, they raised $150 million as part of its Series E funding round, and this was led by D1 Capital Partners. We covered Zetwork, I think back in Jan or Feb, when they raised $120 million in Series D, right? But just to refresh it, Zetwork connects mid to large original equipment manufacturers from India and Southeast Asia with companies globally that require custom products and machine parts. Now, Digjay, I mean, over the past roundups, both Roshan and I have been talking about how B2B marketplaces in India are seeing an increased frequency of fundraisers, right? And also the gap between two consecutive funding is less than a year or just over a year for a few of them. So what do you think are the various factors that's actually driving this trend?
Yeah, I think one is definitely, the demand and supply. The ecosystem is so hot. And, with companies like Zetwork, they're solving a real problem. They're, removing inefficiencies and outsourcing, enabling companies to outsource a lot of things that, that becomes easier just by paying them as a service. And like you said, D1 Capital, one of, the Tiger Global offshores, they, just like Tiger, they're getting aggressive, also entering in the Indian market. I think they've also, invested in a couple of other unicorns in India already. And I think what's interesting is they've, become unicorn just in 3 years. The company was founded in 2018. They've also expanded, at a good rate. What they claim is they're already in 15 countries, working with companies across the globe. So I think it's also to do with, what's the potential and the trade-off between, whether I should enter a round today as a VC or wait for, more predictability, more de-risking. But I think everyone is betting more on, the broader economy and the broader TAM that they're looking at, whatever the startup is, playing in. And it's definitely a supply demand dynamic that's playing out today, which is compressing the back-to-back funding rounds.
Yeah, and we've seen that the purchasing managers index also has risen, right? I mean, it rose to around 55. It had actually compressed in June, right? In July, I mean, it has risen. So it's also indicative that the demand is going to be back. And I had an opportunity to talk to Amrit of Zetwerk last week, and we'll be publishing the episode in the following week, right? A very, very interesting business, I feel. It's definitely not easy to control last mile in these kind of situations where it's not a product, right? I mean, it's not a finished product. A lot of cases, I mean, these are things like sheet metal work and stuff, which is like, it has a lot of custom work. It has to be developed basically, and to control all of the pieces that go into it, right, is a very, very non-trivial problem to solve. Given the manufacturing push that we have right now, whether it's the PLI or the Make in India and so on, their business is going to become super relevant. Do check out the episode that we'll publish, next week.
All right. So one thing which has become, as part of day-to-day activity is ordering food. At least for me, as a bachelor staying alone, Zomato has become one of the daily driver apps. But recently there's an article which was published, which was giving us a behind the scenes view of how the delivery partners actually earn money. And there's been a lot of arguments on both sides. Food delivery companies are saying, no, we are paying them adequately. Whereas the delivery partners, they are saying, with the rise in fuel costs, the problems of the pandemic, things are not becoming sustainable for them. They are being, pressurized with meeting incentives, which I think for them is interchangeably called sales targets to earn a decent wage. And a lot of hardships have been coming up, right? And a lot of opinions are being voiced. So just wanted to get your thoughts on this. Roshan, what's your take on this argument?
See, no place where the supply side is this unhappy can not be disrupted, right? I mean, it's but obvious, right? So either enough people are not unhappy, or I mean, it's just pending disruption, right? And we've all spoken to drivers and delivery folks who haven't really slept well, or who have really had a hard day, right? And I really encourage people to have some 1 or 2 lines at least to talk to these people about, right? Don't just like take your food or get dropped off and just go about your way, right? So I think multiple things, right? So one is that there is this sort of a feeling that everyone has become slaves to the algorithm, right? And it's also why I think product and growth folks should really step out and meet their users. I don't know if they will probably build all of those hooks if they actually got to speak to people, right? And engage with real humans instead of looking at numbers on a screen, right? So if you look at the salary itself, I think delivery folks earn anywhere between 15 to 20K a month. And now for us white collar folks, I mean, this might seem like a very paltry amount, right? But in India, considering our economic base as such, this is pretty significant, right? I mean, for perspective, if you look at it, Asha workers earn somewhere around $7,000 a month, and Manrega pays around $300 a day, right? The problem is that the delivery folks are not the folks who would typically go for Asha work or Manrega. They're not those kinds. These are typically maybe second, third generation farmers who have just skipped the who've just migrated to the cities for a better livelihood, right? I mean, these are those kind of folks. And there was a time when they could earn 25, 30K or even more as well, right? I mean, obviously, but those times are past now. And I think there's 2 ways out, right? So one is, I think either the platforms have to actively think about how they can create entrepreneurs out of these folks, right? Where they give them that leeway in terms of building their own businesses. And it's possible, right? I mean, drivers can become fleet owners, for example, right? And these delivery folks can become captains and can run their own staff, for example, right? Or, I mean, they have to sort of recognize them as employees and provide all of the health and financial benefits like PF and so on and so forth. Right now, I think that this is somewhere in between, right? And that is what is hurting these delivery folks, right? And I really hope that this is solved through innovation, and it doesn't get solved through regulation or unionization and stuff like that, right? Which would be a very subpar outcome. I mean, I was just reading that Uber, somebody had an op-ed that Uber might get nationalized, right? And which is such an absurd thought actually to even consider, right? And because they've actually asked they've asked for bailouts and stuff, right? So yeah, I mean, I really hope that the platforms step in and kind of solve this amicably, because again, these folks are key to their ecosystem, right? So yeah.
Digjay, what about you?
Yeah, I mean, I absolutely agree. And, also one point, I think it was unfair to just call out Zomato here. It's, all gig economy employers who are, responsible for this. And I think it's also to do with, the kind of crunch the gig economy workers are facing due to external factors. Of course, the algorithm for the argument for the algorithm is valid, and how we would design those incentives, but also, external factors like fuel costs today, the pandemic, which is, affecting them, and the social security benefits. So all that is adding up, and the onus is, definitely on the gig economy employers. And they have to collectively think about, about these workers and not just, workers who are doing a process. They also need to take care of their upskilling and uplifting of them, of these workers in the society.
Yeah, no, that's a very important point that you bring up, right? The whole upskilling aspect of things, right? I mean, because I think the problem also is that it's such a grind and it doesn't have a growth prospect associated to it, right? I mean, you're a delivery boy. I mean, I've seen delivery folks, their age ranges anywhere between like 20s to like 40s as well, right? There has to be some kind of a growth path to these people, and I think it is possible, right? I mean, I'm not saying the entire base will graduate to become these people, but I think reasonable portion of that at least can be done. And this, as you mentioned, it's not just a Zomato problem, it's a ecosystem problem, it's a platform provider problem, and not just food delivery. I mean, even other other platforms like Uber, Ola, etc., right? So yeah,
absolutely.
Yeah, but I mean, on that note, Rapido seems to be doing pretty well. They have now launched in 26 cities altogether, and they've recorded a 4x increase in their business. And I think they have witnessed a recovery of up to 85% compared to the pre-COVID levels. They recently raised a $52 million funding round from Shell Ventures, and there were notable individual investors as well, like Kunal Shah, Amarjit Singh of Spotify India. And of course, the existing support from their investors continued from Pawan Munjal of Hero Group, Westbridge, Nexus Ventures, and Everblue Management. But it's interesting, right? Rapido, I mean, while it started off as a ride-hailing platform, it is now expanding into hyperlocal delivery as well, the last mile connect. And this is one of the main driving factors behind their growth, right? The on-demand logistics. So what do you make of this pivot towards last mile delivery? Digjay, I mean, let's start with you.
Yeah, sure. And the size of the fundraise talks about the kind of cash burn or the cash requirements that the startup has today. And I'm not sure how easy or difficult it was for them to raise these funds, but they definitely are facing a crunch in terms of strategizing and using them efficiently. And I think that's where one of these business opportunities has opened up. And I'm sure they've looked at Dunzo very closely, which has expanded, again, very strategically in select pockets, because adoption is not going to be, pan-India. It's always going to be in high density metros, where you have shorter distances to, travel. So both for delivery as well as, the bike taxi, right? That model works in select places. And I think they're trying to identify that by going into those select pockets, select metros and, executing.
Yeah, no, last mile connectivity, anyone who's solving for that in India, I mean, is definitely relevant, right? I mean, even given the post-pandemic where, people are less sort of keen to, share rides and so on. And this has been borne out by the numbers also, right? So ride sharing has actually gone down. I feel even so, I mean, the base itself is so big that, there will be business to take, right? So interestingly, I think post-pandemic subscriptions will pick up, right? People will buy two-wheelers and four-wheelers, and they'll be open to this subscription model of things, right? I don't know if the OEMs will kind of launch that, and that'll be interesting to see.
The Tesla-like subscription model. All right. So one of the last headlines for the week, right, was Smallcase. And why this was interesting was because Amazon has entered the financial service and insurance markets of India in recent years, and this is their investment. The $40 million Series C was led by Fairing Capital and Premji Invest in Smallcase. I think this is part of the $250 million venture fund that Amazon unveiled earlier this year, in which they wanted to, boost the Indian startups and entrepreneurs that are focused on digitizing small and medium-sized business in South Asian markets. But I mean, this is kind of a start of a new trend to say that tech companies are pouring into VC investments.
Absolutely.
So, Digjay, can you help us understand like what exactly is it in for them?
Yeah, I think it's more about expanding, to our earlier point, expanding the opportunities and going beyond the vertical that you are in and trying to capture the adjacencies. And rather than building everything from the ground up, if you can collaborate, partner, and in this case invest when you have 250 million fund, I think it's a good way to expand that opportunity for yourself as a company. And I think Amazon is doing exactly doing that, and they've also invested in NACCO before, Capital Float before. So I mean, they have the fintech ecosystem covered that way, and they're going deeper with that. And yeah, I mean, I just love these Smallcase guys. Brilliant company, and they've started somewhere in 2015, and they've expanded slowly and gradually, but they've expanded in the right way. They're not competing with the brokerages or the investment advisors. They're partnering with them. So they now sit at the center of the ecosystem where they can serve the end customer through these brokerages, investment advisors, and they've made it a very seamless and easy to use product. So I mean, kudos to them, the way they've strategized and they go to market. I think it's absolutely bang on, and I think with this fundraise, they can get into several other products, and they already have the distribution through their partner channels. So excited to see how they roll out the new set of products.
Yeah, it's a beautiful product as well.
All right, so this was a very interesting tweet that I came across. It's tweeted by Balaji Srinivasan, and he's talking about the collapse in state capacity. Roshan, I mean, I'm sure you have a lot of thoughts on this.
Yeah, I know it's certainly an interesting tweet thread, and I was also reminded of Sridhar Vembu's tweet, right? He said something to the effect of the same level of competence or incompetence that you see in Afghanistan will play out with the Federal Reserve as well, right? I mean, something to that effect. I think the US case is a bit of a Vinasha Kala Viprita Buddhi type of a situation, right? But what I found interesting is that the contra trend is happening in India, right? While US is struggling with state capacity, we've seen that for vaccines, we've seen that for even welfare and so on during COVID, right? We have ramped up like crazy, right? I mean, we spoke about e-rupee on one of the podcasts earlier, and that is going to become super relevant going forward. But then, I mean, look at Aadhaar, Jandan, UPI, what it has done, right? And also look at the fact that we're building roads, electrifying villages, enabling piped water and gas at record numbers, right? I mean, like last year, for example, the amount of roads built per day was the highest by a significant margin, right? And despite all of the COVID and everything. So I think that is a very heartening thing to see on the Indian side, right? The fact that, we are building this state capacity actively, right? And we're trying to solve for this last mile delivery. So that is going to be very key as we look for a post-pandemic future as well, right? I mean, post-pandemic future as well, where, a lot of this welfare has to be like enabled for people. So yeah, I thought that was interesting.
Digjay, what's your take?
Yeah, I mean, definitely interesting. And, of course, Balaji is at the center of the decentralized revolution. But it's a valid point, and again depends on how the geopolitics is playing around in different economies. And like Roshan mentioned, India is seeing a mix, but we are seeing a lot of state-led infrastructure that is getting built for the tech, which is creating a good platform for private companies to come and innovate upon. And I think they are encouraging more local companies to come and innovate on them. They want to encourage local players to come and do that first, compared to foreign players coming in and doing that.
Yeah, no, I think that's an interesting point that you bring up, right? In terms of encouraging private players also. I think if you look at what was that? I mean, even something like ISRO, for example, right? I mean, having initiatives to work with startups, right? And then you can see what NPCI, UPI has done for India as well. And everywhere, right? And even in the Independence Day address also, the Prime Minister called out startups specifically, right? So I think we're seeing like a willingness to work with startups and private companies to build these out, right? And the government is finally recognizing that, I mean, it will not be the one, building everything end to end, right? I mean, it will build that enabling infrastructure, and private enterprises will leverage that infrastructure to kind of like give out services that would be relevant for the 1.4 billion people in India. So yeah.
Folks, let us know your take on this, right, and what your opinion on the comment section below. And yeah, with this, I think we come to the end of this week's roundup. But as always, Roshan, before we sign off, can you tell us a bit about the episodes we'll be putting out this coming week?
Yeah, I spoke about my conversation with Amrit. Again, fantastic business that they're building. Just a 3-year-old business already valued at $1 billion plus. And also, I mean, the heartening thing is they're working with SMEs in India, and running an SME business in India is a nightmare, right? I mean, there's so much of regulatory problems, compliance, and then the case of supply chains and so on and so forth, right? So typically, if you talk to an SME person, it's usually run by 1 or 2 people at best, right? I mean, I'm talking about a, let's say, lathe shop or like a factory setup or whatever, right? And this person has very limited, sales skills, right? I mean, he's probably got 1 or 2 people who are, giving them work. Zetwork is like widening the demand for them, right? Sourcing greater demand for them. And at the same time, they're also like helping some of the larger companies like Tata and so on procure from all of these folks, right? So, we often talk about, product market founder fit. And again, Amrit is one of the handful of people who can perhaps build out this business, right? Because he has had an unfair advantage in terms of working for ITC, right? And working very closely with the head of the agri business there, right? So fantastic, podcast, very detailed nuances about manufacturing also. And I really like my conversation with Raj of Stoa as well, Stoa School. They're building a very different type of B school, right? And basically what they've recognized is that, look, I mean, the conventional B schools, we have 5,000 plus MBA colleges in India, and the curriculum has not changed over the last 25, 30 years, right? I mean, it's still got that, outsourcing of the 90s hangover, right? Where we're still teaching, organizational design and, whatever else, which is not to say that it's not important, but it's not immediately relevant, right? I mean, what is a guy going to do with organizational design when he has to go and build a product, right? Today. So, and he doesn't have much of an organization to work with in the first place, right? So they've kind of recognized what are core skills for startups itself, and have built a new age B school for it. I mean, very interesting conversation on EdTech also. So yeah, a couple of really good episodes coming up, and I hope you guys will check it out.
Yep. And do keep an eye out on our social media channels. That's @Operator Startup on Twitter and the Startup Operator on LinkedIn. But having said
that, check out the VCpreneur podcast. A bunch of interesting conversations on that also, and do follow Digjay on Twitter as well. Thank you so much, Digjay, for being on the podcast. Really appreciate it.
No, absolutely.
Really fascinating conversation with you.
Fascinating, and just love Roshan, Gunjan, what you guys are doing. Again, overall, not just with this show, but for the ecosystem. I'm looking forward to those 2 episodes as well. Love what both these founders are doing. And I mean, looking forward to many more conversations, and glad to be here on the podcast.
Awesome.
Thanks a lot, Digjay. Folks, thanks a lot for tuning in. We'll see you again next week. And once again, don't forget to check out the VCpreneur podcast. We'll be linking in the description below. And have a great week ahead.
Thanks, guys.
Awesome.
Take care.
See you guys. Cheers. Bye.
Bye.